We have now completed this second part of part 8.5 about annuities and stocks, and we're at the very last consideration of the portfolio. And these are investments that ensure diversity. The idea of a portfolio is to be diverse. And that means a variety of investment types. Right. And we've talked first about a general savings where you have a set amount and it's a compound interest like a CD. These are um, CDs and some savings, uh, savings accounts. And that's one part. And this is fully cash. The second one we learned was annuities, where we had deposits to earn long term interest for the future. And these are usually uh, retirement, investments. All right. And now we're going to talk about some other diversified items. Now, this too is cash, but it's harder to get to. So, um, you have to have a portion in that ready cash and some in long term cash. And here's some other investments that are also types for the portfolio. The most volatile, and we say high risk to medium risk, are stocks. So shares purchased directly or in mutuals that are driven by free enterprise. Well, I wouldn't say free enterprise, but driven by demand. All right. And these are purchased in blocks of, I think, a minimum of 100, but you can buy one of certain ones. They will allow it. Bonds. The set, and it's kind of a loan, the set time for investment, company growth, or municipal improvements um, at, at a set amount where interest is applied. This is usually low risk, but there are times where a municipal, that means a city, can run out of money and they cannot pay back those loans that you made to them. Because bonds are loans from an individual to a company, a city, government. Government bonds are fairly secure. Um, Inflation is not included in the bond. In other words, whatever the interest rate is at the time of purchase is what they're um, legally uh, allowed to pay back to you. Mutual funds. Stocks and mutual funds are handled by stockbrokers, but mutual funds are the safer way of a stockbroker chain, or I don't know, it's a stockbroker, um, where a company can invest for money to make money and share the income investment. And now you're getting serious load, no load, uh, half 5%. There's all kinds of items that apply to mutuals. Um, there are uh, medium risk because they lose money if they don't make money for you. So they work very hard at keeping companies that are in what they call the 500 and companies that are up and coming, which make the better money for investment. In other words, if it's a high growth company or a high demand company, then likelihood of the stock in that uh, will increase, and the dividends received are part of the earnings. Okay, stocks and mutuals pay dividends from profit of the company. And they're usually quarterly or annually, are used to buy more shares. You have to request to have the dividends come to you as, and then you have to report it as income. So what they normally do is roll it into new stocks. Okay, so we have an example here of this. This is how you see it in newspapers by law and internet. And we're going to go through reading it. We notice the company name here is Company A. They're usually short forms of the company name, but this is an example. So the stock exchange in this particular is below company name. And in the example, it is the NASDAQ. From the California branch. All right. The closing price is the bold number under NASDAQ. And in this case, the closing was 269.85 per share. Just good stock. Net change is the green or red that comes afterwards. The triangle shows that this one increased in price during the day overall, um, a certain amount. And in this net change, it is 0.52. And that's a very small amount because we're talking money per share. Money per share. And opening price is where the open is, which is $267.62. And you can see that it was at 267 and it ended up at 269. So it had a growth for that day. The high of the day is right underneath open, and that's $272.17. And this is always from yesterday. Uh, these are all the information from the previous day of sales. And then the lowest during the day was $270.26. These numbers are very important to people who watch the stock market and who are brokers. Um, they watch the volume, how much is moving, the cap, the market cap, and they tell you how much the change is as in the highs for the 52 weeks and the lows. And you can see that this was low at 188, and now the stock is valued at almost 270. So, and the PE is something else that evaluates the amount of dividend expectations. All right. So now your job is to get educated, in charge of your future. Plan good retirement and save as much as possible. A portfolio is your worth, and the government will never be able to take care of all of this population. Understand that. You have to be independent and not dependent on government items. So I think Social Security will crash eventually. The population is too large and nobody's dying. We live longer. So be in charge. Um, there is no excuse for ignorance in your personal life. Decisions are decisions, and there's no overs once you're an adult. Make sure you do the homework. It's very easy, and I thank you very much for listening.